The stock market is down over 2% today after Trump announced more tariffs over the weekend. So here are 3 stocks I bought during this dip. Let's get right into it. Now, the first stock I bought today was Amazon. Now, it is no secret that Amazon has just been a laggard over the past 5 years. Last year alone, the stock has been up only 1%. Over the past 5 years, up 41%. When we compare that to other big tech stocks like Google last year alone was up 62%. Over the past 5 years, 242%. We could look at Microsoft. Microsoft last year, kind of in a similar spot, up just under 6%. But over the past 5 years, up over 100%. You look at another company like Nvidia, last year was up 27%. So in general, Amazon has just fallen behind. So why now? Why is now the time to buy Amazon? Well, it really comes from one specific aspect that can change the entire trajectory of this company. So Amazon has multiple different segments. They have first-party online sales, they have physical stores, third-party seller services, advertising, subscription services, AWS, and other bets. But a majority of this revenue, a majority of the revenue they are making comes from their e-commerce. They are making over $261 billion from e-commerce each and every year. The problem with e-commerce is this is such a low margin business. There are different factors that go into why e-commerce is such a low margin business. Like there's just intense competition and pricing pressure. So think, when you can easily compare the price of something on Amazon compared to somewhere else, you're always going to find the cheapest option. Because of that, it is basically just a race to the bottom every single time. In order for people to buy from you, you're gonna have to have the cheapest products, the cheapest deals. So margins by nature are going to be pretty bad. There's also high customer acquisition costs. So just digital ad spend in general. So there's bidding wars on platforms like Google and social media. It just makes it expensive to attract new customers. You have to spend the most money to get those ads in the places you want them to be. There's different things like logistics and shipping complexities. So think, nowadays it's always about how fast can something be shipped. It's about free shipping. It's about, can you ship something to me in 1 day? So obviously for free shipping and fast shipping, you're going to have to spend a little more on that stuff. Now by nature, e-commerce is just a low margin business. But right now there is such an opportunity for margin expansion for Amazon. The biggest opportunity for margins to expand is with robotics. So I came across this chart on social media from ARK Invests about the amount of Amazon employees they have versus robots. So we can see since about 2022, Amazon had 1.6 million employees, and since then it's declined slightly and basically just stayed flat. But also in 2022, they had 520,000 robots, and just in a few years, that has expanded to over 1 million robots in fulfillment centers. Now on X, there are plenty of videos of what these robots look like. These two right here are humanoid robots, but most of the robots aren't even humanoid. They'll look something more like this. Or you have these little things going around, moving package to package. It's impressive. So right now with Amazon's aggressive deployment of having over 1 million robots, it is projected by 2027 that they could save over $12 billion by automating over 75% of their operations. So think, when Amazon had a majority of human employees working, these employees can't work 24/7. They have to clock in, clock out, have lunch breaks, they have to go to sleep, all this stuff. They can complain, it's kind of a hassle, it's annoying. Robots can work 24/7, they don't need a lunch break, they're not gonna go complain, and these robots are fully optimized for their tasks. And best of all, you don't have to pay these robots. So not only does efficiency go up, costs go down. And then also there are projections indicating a potential reduction of 600,000 positions by 2023. This automation is expected to save roughly 30 cents for every package shipped. Now that might seem like a small amount, but remember how low margin this business is? This 30 cents per package, when millions and millions of packages are shipped each and every day, adds up like crazy. There are many parts of this business. There's obviously e-commerce, but there's AWS with cloud computing, there's advertising, there's streaming, they have other bets, they own a bunch of different services. But in general, the number one bull case for me with Amazon is the possibility of margin expansion over the next 5 to 10 years with robotics. And that is why I think it is such a big buy today. Now let's move on to my second stock. The second stock I bought today is one that's pretty popular, but not always for a good reason. And that one is Duolingo. So Duolingo has just been getting crushed lately. Down 55% over the past year, and year to date, it's already down over 14.5%. Now during this dip, Duolingo is still growing revenue 40% year over year. They're just shy of $1 billion annually of revenue. And what's impressive is over 80% of this revenue is subscription revenue. This is recurring revenue and is growing 46% year over year. All while during this dip, daily active users is growing 35%, up over 50 million daily active users, and monthly active users is at 135 million. This company is also growing free cash flow at a 55% rate over the past year, and the stock is now trading at a 28.4 PE ratio. Now, I have talked about Duolingo a lot on this channel. 7 days ago, I posted about this stock. 4 weeks ago, I posted about this stock. I have a video after Q3 earnings. Then I also have my first video over 3 months ago about this company. Now, in all those videos, I feel I do a good job breaking down most of the company, but there's one main aspect I've missed, and that is their motivation mode. Now, I'll get into deep detail about that in a few minutes, but if you don't know what Duolingo is, I want to explain it. So I'm sure most people know Duolingo is a gamified language learning app that has recently expanded into subjects like math, music, and chess. Pretty much everyone knows that. What I want to kind of get the foundation is why I originally invested into this company. So what Duolingo does is they collect personalized learning behavior data at a scale no one in the world is doing. So what I mean by personalized learning behavior data is every time someone completes a lesson, whether they succeed, make mistakes, just however they interact with the lessons, the screen, Duolingo is collecting this data that is specifically telling Duolingo how people learn on the most personalized level. Now, this data alone is valuable, but with the addition of AI, it kind of supercharges this business. So what I mean is it took 12 years for Duolingo to build 100 courses. Last year alone, with the addition of AI, they were able to build 148 courses in just 1 year alone. It went from 100 courses taking 12 years to 148 courses taking 1 year. Now, what some people might question is the quality of these lessons. If it's AI making them, are these lessons even quality? Yes, and that is because these AI models are trained specifically on this data. So think about it like this. The flywheel is when people complete lessons, it gives them data. This data then trains their AI models. These AI models then make better and more lessons. The better and more lessons there are, the more users Duolingo has, and these new users bring in more data. It keeps going around and around. Now, I've explained this part of the thesis before, but I haven't explained in as much detail the second part of the thesis and what I think might be even more important than what I just explained. And that comes down to Duolingo's real moat is motivation and retention. Now, I wouldn't think of Duolingo like a language app. I would think of it more like a behavioral change company. In education, there's never been a problem with content. There's so much content out in the world. You can go on YouTube to learn. You could have tutors. You have school. That has never been a problem. The problem is retention. The problem is having lessons, having the work in front of you, and keeping you coming back each and every day to learn. That becomes increasingly more important when you're talking about something like language. To learn a language, you can't just learn for a few weeks, a few months. You really need to be consistent for years to become fluent in that language. Now, you could have ChatGPT write you a course, write you a few lessons on how to learn Spanish, but in reality, you're not gonna stick with that. You might learn for a few days, but motivation is gonna give out. What Duolingo has mastered is that motivation aspect. Now, for example, let's just take streaks. At first, when you're learning something, you are highly motivated. You don't need different ways to come back each and every day. You wanna learn. It's often exciting to learn something new. After a few weeks, and maybe after a few months, it starts to feel like a chore. You're no longer motivated. You start skipping some lessons, and ultimately, you're no longer learning. The gamified aspect of Duolingo, the streak aspect of Duolingo, it starts to feel like an obligation. You have worked so hard, you've started to build up such a long streak, that if you lose your streak, if you lose your multi 100-day streak in Duolingo, you really feel like you just wasted all your effort. That streak shows the amount of discipline and effort you put in for weeks and months and years, and you get to the point where motivation isn't driving you. Because motivation is temporary no matter what you do. What's driving you is all the work you've done in the past, and Duolingo constantly reminding you of how far you've come. Now, that's just one aspect. But the next aspect I want to bring up is the dynamic difficulty. It's almost like a perfect tutor. So Duolingo, through thousands and thousands and thousands of A/B tests, have figured out to a T how to truly personalize and optimize lessons for people. They have figured out if someone is making, let's say for example, 3 mistakes within the first 2 minutes, they are way more likely to quit the lesson and not come back the next day. They have figured this out through A/B tests and billions upon billions of personalized learning behavior data points. So now they've gotten to the point where, hey, someone just made 2 mistakes. If they make that third one, they're gone. We're gonna lose them for a while. So Duolingo has figured out perfectly how to fix that. If something is too hard, they'll start personalizing that lesson and that course to make it just slightly easier for you so you're not making that third mistake and getting off. Now, it could be vice versa. If something is too easy, they figured out, hey, they're gonna get bored, they're not gonna come back, they're not learning. So in real time, they'll fix that easiness for you, make it a little more difficult, and have you stay on for longer. This system prevents frustration and boredom. Now, this is how a great human tutor would work, but Duolingo is able to do this at a massive scale automatically. Now, most importantly, why this is so hard to copy is the thousands upon thousands of A/B tests Duolingo has done over its existence. Each and every time you open the app, there are so many A/B tests going on. All these A/B tests have helped Duolingo have each and every person on their app have their own personalized experience. If you've ever used Duolingo, what you're experiencing on your 5th lesson of Spanish is not what someone else is experiencing on their 5th lesson of Spanish. Now, the core structure might be the same. What you ultimately need to learn over that entire span is going to stay the same, but it's going to be personalized towards you and how to keep you on the app longer. The best way to put it is Duolingo is the only social media app on earth that makes you feel better while you're on it. Now, Duolingo is the second stock I bought today, so let's get into the next one. Now, the third and final stock I bought today on this dip is Adobe. Now, again, Adobe has been getting crushed. Over the past year, down 32%. Past 5 years, 37%, and year to date, it's already down 12%. Now, they are not the only software as a service company down. A majority of software as a service companies are down to start this year. Adobe is a company I've talked about so much on this channel. I had one 6 days ago about Adobe. I cover them in this video right here. I had one after their earnings report, and then I have a lengthy one, a 26-minute video going over the entire Adobe thesis. Now, I'm going to put that up in the corner for you if you want to watch that. Because in that video, I don't think I could explain it any better. I don't think I could explain the bull case, the thesis, the bear cases any better than I can in that video. But there's one thing I really haven't covered in a bit on Adobe, and it's a comment I got on my last video. And the comment reads, if AI lets one designer do the job of many, will corporations let go of some people? If they do, they will also save on Adobe subscriptions, lowering Adobe's revenue. Now, that's one of the 3 main narratives, one of the 3 main bear cases to explain why Adobe has dipped. People think AI is going to become so good at automating things that, let's say, what it took for 10 employees to build, it will not only take 1 employee, partner it up with AI to create all that. Ultimately, that would hurt Adobe significantly. You have to pay for less subscriptions, and your revenue is going down the drain. Now, Adobe has stated this has not yet happened. They have not seen a reduction in employees or subscriptions as AI has been created and generative AI has taken over the past few years. But what they are starting to do to capitalize on this is they are starting to charge on generative credits. So Adobe is employing a consumption-based model for AI features where users pay for a Creative Cloud subscription that includes a limited number of generative credits each month. If these credits are exhausted, users may need to purchase more or face slower generation speeds. So generative AI features like Firefly and Photoshop or Illustrator require tokens or credits to operate. There's a monthly reset and no rollover. So credits allocated with a subscription do not roll over to the next month. They reset, meaning unused credits are lost. There's consumption rates. So standard generated fill typically costs 1 credit, while premium features such as higher resolution, partner models like Flux or Topaz can cost 5 to 10 credits per use. So Adobe has found a way to capture the explosion of content with AI. Right now, there is proof that companies, businesses, organizations, they're not saying, great, now with AI, we could fire more employees. What they are saying is, great, now each employee is more effective and we could generate even more work. Now, if this is a scenario that happens, Adobe is going to benefit an incredible amount. Not only are they getting money from subscriptions, they are getting money on a consumption basis. If content is truly exploding because of AI, this will heavily benefit Adobe. Now, let's say the second scenario happens, where yes, they start firing more employees, and it's just 1 employee generating everything with AI. Adobe also benefits, and they'll likely be making even more money per subscriber, per customer than they are now. So Adobe's already got the worst case scenario figured out, and worst case scenario might actually help this business make even more money than they are now. So again, I don't want to go too into detail with Adobe because I have so many videos out there with them. So if you want to learn, again, I said I'll put that up in the box. You can go on my channel, find the other videos. But Adobe is a company I'm incredibly bullish on. So after buying those 3 stocks, here's what my portfolio looks like. 23% of it is in Amazon, 17.2% is in Adobe. We have Google, AMD, Duolingo, just above 12%. We have ASML at 9% and Nike at 7.6%. And this spot is SoFi at 4.9%. Ideally, Amazon and Adobe always run this portfolio. I want Amazon to stay above 20%, around that 25% range. And I want Adobe above 20%. And then for Duolingo, as it's a smaller company, about $7 billion market cap, I'm aiming for more of a 15 to 17% range of the portfolio. Now, those are the 3 stocks I bought today and why. Now, do you agree with the stocks I'm buying? Do you agree with my reasons I'm buying? Are there different stocks you're buying on this current tariff dip? I'd love to hear, so let me know in the comments. Again, this is never financial advice. I'm not a licensed financial advisor. You should always do your own research before buying a stock. I appreciate you watching this video, and I'll see you in the next one.